Today, Semafor has more than 1 million subscribers and bureaus in the US, Sub-Saharan Africa, the UK, and the Gulf. Our founding mission remains the same. We aim to provide our audience of global leaders with the most trusted news source in the world that bridges ideological and geographic lines. Our coverage of Africa is central to that mission. Semafor Africa was built by Africans for Africans with a team of local journalists who draw on their experience and contacts to break the kind of news that you can only do when being on the ground and understanding the nuances of the continent. Today, we're very pleased to host all of you here for an editorially led discussion about financial inclusion, the first of a series of events that we're hosting across Africa and the Middle East. The Next 3 Billion Tour is spotlighting insights from the Global Findex 2025 report and Global Digital Connectivity Tracker. These are translating global research into actionable, locally relevant conversations. In just a moment, you're going to hear from policymakers, business leaders, innovators, and civil society to explore how financial inclusion and digital connectivity can unlock the full potential of the next 3 billion people coming online. I want to take a brief moment to highlight that quality, independent journalism requires the support of great brands and partners. This series would not be possible without the support of the Gates Foundation, which has been a steadfast champion of financial inclusion in Africa and around the world. Speaking of quality, independent journalism, in the spirit of this summit's mission to explore real opportunities across emerging markets, I'm pleased to introduce Africa editor for Semafor and son of Nigeria, Yinka Adekoke.
Minister, we're delighted to have you. Thank you so much for making the time. We were just talking earlier there, and as we both know, when we talk about financial inclusion, we are often having that conversation from the managers of monetary policy, usually the central bank. But we were keen to have you here because we understand so much about what actually happens to the policies that need to really get this implemented, that need to have an impact on the economy. And that's kind of where I wanted to bring you in on this conversation, to talk about the progress that we've seen. We've seen so much progress with, and we're going to have a presentation afterwards talking about this. 63% of Nigerians now have some form of affordable account. 43% or something like that are now, having formal savings, and it's one of the highest in Sub-Saharan Africa in terms of savings rates. So there's clearly a lot of great progress being made, but there's still, some way to go. So I wanted you to talk a bit about the kinds of policies that are in place or that need to be put in place, what you've done so far, that help encourage this, that help push this forward, and maybe we could get into the impact on the economy.
I think, okay. So if you look at the enabling factors for growth of financial inclusion, policy is one of them. And I think maybe the basic foundation. Before we even went around policy, I think there was some bit of financial inclusion that were happening. Then the regulators found out that they had to catch up, and then policy started to come into shape, more like to create a structure around how the disruption was or should be happening. I remember when, we started with, the internet, for example. Then we started with, first of all, receiving a lot on our phone, even text messages. So that was very exciting. So technology was actually ahead. Well, the policy actually catches up really fast. So we are actually quick adapters and quick adopters of technology. And the growth that we've seen in fintech, in addition to policy, is usually because of, or has been because of, the growth in innovation that you mentioned. And so the computing speed of your smart devices have actually gone up much higher. Yes. So that's contributed to especially financial technology. So we've seen growth of fintech technologies here. That's because the skill was available. That's why I said the internet was a huge contributor to that. And then now let's go into policy. Policies like KYC, the NIN. The NIN is the Nigeria Identity Number. So that's also like your social security number.
Yes.
So when we started linking our NIN to our SIM and linking our NIN to our BVN, the bank started with the bank verification number. So that was actually our main form of our unique identifier.
Yes.
So that started, and then the telecom companies then realized, because there were lots of frauds that was happening on using phones. So you hear about SIM swaps.
Right.
So people were swapping SIMs and then just downloading all your account and operating as if they owned your account because we're operating on devices. So one of the policy that came was improving the KYC and the compliance around identification. So the NIN and SIM linkage was very crucial. So now we can actually identify you just with your NIN and with your SIM card. So we know who you are, where you are, and we can actually kind of track it. To a large extent, it's improved trust, because trust is very important. If while we're talking financial inclusion, if people don't trust the system, they are not going to come on. Even up till now, people still don't trust. They still don't have. So one of the reasons why you still have some exclusion is also due to trust. So people are going to bring their BVN and NIN. They don't really trust the system. So that's where a lot of the financial literacy is going into. Now, the central bank also jumped on the bandwagon by ensuring that the banks were ready.
Right.
They enabled, that's when we started with NIPS. So digital banking started, they enabled that to happen. Then they enabled the APIs for the fintechs to actually be able to integrate into banking system. The open banking application platform also came on board. And then they encouraged and pushed banks to have the agent banking. So you see a lot of banks started with agent banking. They encourage the rollout of POS machines. So, and they created a whole class of jobs. So now you walk on the streets of any street in Nigeria, where the banks and the ATMs don't have cash. Our POS operators have cash.
Right.
And you with any banking transaction with one babe or one guy sitting under one shed, sometimes don't even have one umbrella. Yes. And banking transactions are happening. And I remember when banking, they encourage the rollout of POS machines. So, and they created a whole class of jobs. So now you walk on the streets of any street in Nigeria, where the banks and the ATMs don't have cash. Our POS operators have cash.
Right.
And you go there, you can do any banking transaction with one babe or one guy sitting under one shed, sometimes don't even have one umbrella. Yes. And banking transactions are happening. And I remember when there was that cash shortage, it was the POS merchants that were our go-to. So all of those enabling factors or enabling policies and environment that came from the central bank helped to fast track it. Then the fintechs came in. Then they took it to the next level. So while the banks were still struggling with their traditional banking, you know how banks are. The fintech boys came in. Money Point, for example, started rolling out their own POS machine. PalmPay, now you can work. In fact, your phone is even a POS machine. And so they took it to the next level. That was also supported by the central bank policy and by, well, greater innovation. There was skill set. So we, when I say we government, you know, we felt that the country was ready. There was enough skill set within the country to be able to make that happen. And then, of course, investors came in, put money behind those fintechs, and then it opened our eyes that there was greater acceptance and acceptability of those payment systems, and we saw the growth of that happening. Then, but the issue or the area where we still are fine-tuning our regulation is in data protection.
Okay.
So with the fintechs, we saw lots of fraud happening because it was easy. Online real time, they're swiping your account. People still do not understand how to protect data. Even up till now, they will call your grandmother, your grandfather, even people who are not even, you think should be savvy, and they're giving off their NIN number, or they're giving even basic date of birth. You know, those your unique identifiers, your identity information to fraudsters who are claiming or pretending to, you know, be calling you from banks. And you see, so though it's reduced because financial literacy has gone up, and then, you know, social media. So when they hit one person, the guy goes on the social media and shouts up and down, and then people are more aware. So there's been deliberate increase in that financial literacy. That's been championed by the central bank. Even the SEC also started doing some financial literacy. And then you can also see the proliferation of products, different products. So that's where the economic impact is going to come in. Well, of course, with financial literacy, with financial inclusion, digital devices, banking at your doorstep, those POS, merchant banking people, and agents, we'll call them agents, you find greater savings. So that's increasing our capital formation.
Right.
That makes it easy for us to actually mobilize capital for development. Either we're borrowing or we're seeing more people actually saving up to invest. And then because there is financial inclusion, we're also more assured, because then we use the digital tools now for social transfers. Right. Social transfer is a big part of the program of the government. For the 25 million people we're targeting, 15 million households, we're not giving them cash anymore. So it's a requirement that for you to receive, and these are in the village, these are the lowest, because those are the ones that qualify for this for the social transfer. You just have to have a bank account. And those who are going to be willing and able to give you that sort of banking service will likely be the OPay, PalmPay, Money Point, you know, those ones that are really in those villages and are operating without the heavy infrastructure of traditional banking. They are very nimble, so probably just one office and riding on the internet backbone and connectivity that is available in Nigeria. The internet penetration has helped a lot. Another area where government is doing a lot now is to roll out more fiber network so that we can increase the connectivity you're talking about. In Nigeria is currently at 75%, or maybe that was our target for 2025. Well, we hope that we can get, I'm sure we can, with the rollout of the 700-kilometer fiber network that the Minister of Information and Digital Economy is proposing. I think we can see that maybe 90%. Not everybody will be included. You have children who are not likely going to be using or banking, so there's still going to be a section of the population. So if you're counting, you have to remove those who are not required statutorily to bank or can't operate a banking account, the very old ones and the young children. By the time you take out those numbers, you find that we're very close to being fully banked, quite close to it. Currently, we are 74%.
Do you have some sort of targets, dates as to when you want to get to that point of being fully banked?
Well, for the connectivity, it was 75% for 2025.
Right.
So, but the minister will probably give us a better figure based on projection, based on his ability. Now he's gotten green lights to roll out those fiber networks. So his projection and target will likely increase. So for digital connectivity, everybody, even kids, use internet. But for financial users of financial products, you're now likely going to find children. So if you take out the numbers, I know we're heavily populated at the young, so probably, let's say maybe 10% of the population at the bottom and the top. Right. That's the very old and the very young one. Well, and currently we're 74%. So we're very close. So we just need about maybe about 10 to 15 more percent to hit full financial inclusion. So we're not doing very badly. We're not doing badly at all.
What is the holdback for that? To get to that last 15%? Is it about the identity challenges, or you just feel it's really just pure technology, pure connectivity? Sorry.
No, well, I think the digital network, the telecom networks have done a lot of making sure that they are in most areas. So in some villages where you don't have connectivity, that would be a factor. Electricity will be another factor. Then affordability, affording the devices is another factor. Okay. So most of the banking operations, you need some form of smartphone. Right. Even when you have the not too smartphone.
Is there anything government can do in terms of the affordability? Is there a role that you might have?
So that's when we came up with the consumer credit system, where we are, let me say, empowering people to adopt credit. So we're empowering people to consume more like it. So you could buy your digital devices with consumer credit. Okay. And then creating more jobs. So we're spending more now in priority sectors of the economy. Our job growth, I think our job target is at least maybe 10 to 20 million people. That's 10 to 20 million people who have either increased their earning income or are just even coming into the earnings brackets for the first time. And how does that happen? Building infrastructure, you have lots of laborers who go to contribute, and that's a whole lot of things that we're doing. So just infrastructure development alone, we've actually mobilized a lot of people to support that building and construction phase. So when you increase people's earning capacity or propensity to earn, their propensity to consume also increases, and the ability, and most of the time they prioritize. And the prioritizing, most likely a phone. Yeah. And then we also see, a lot of remittances from the diaspora. A lot of people are asking relatives to buy them phones. So you see lots of people who are buying phones for relatives, not for themselves, but for relatives. It's usually one of the requests I will get, even for me. So my young nephews and nieces call, Auntie, what do you want? I want a phone. Even kids, everybody wants. Right. And, it's not just phone you use. You also use tablets. And then, there's Android, there is iPhone. Right. So Android is quite popular, and there is connectivity between both. So it's
Yeah. I mean, that makes a lot of sense. I mean, just because we're short on time, I do want to, because I really want to focus on this part that is definitely your portfolio, which is to dig a little bit more into what you said earlier about how financial inclusion supports savings rates and how the savings and improved savings rate is essential for improving capital formation for the country, and sort of that, how you see that connection between financial inclusion and a kind of transformative effect on the economy, on the wider economy?
I would say it in two ways. Some people, I mean, we know that there are some people that were saving, but they were not banked. So they were saving outside the banking system. We had people who were saving under their pillow, under their mattresses and all of that. But those had risks. So either prone to theft, destruction by fire or flood, or overspending. So because you have the money, you're buying what you don't need. So of course, when you bring people to the banking system, they naturally will put their money there and they're not going to spend everything. And like I said, there are products now, there are saving products that banks have been offering, these fintechs have been offering. So it's easy for them to actually look to that, to spend. But again, we've also seen a lot of spending because you're digitally included or financially included. Betting, it's gone up. Crypto, gone up. So a lot of people are also, getting onto those networks or the digital wallets and all of them because they want to bet. They want to, have their money move. Mm-hmm. But the good thing about it is that we've seen increased velocity of money, of movement of money. We've seen increased savings rate, and then that increases the multiplier effect. Even the velocity of movement. Even when you're spending, even if I'm not spending, I'm not saving as an individual, and I'm buying, the person who I'm buying from will be the ones saving. So by and large, it's a win-win, or is a, usually when it's a zero-sum game, money moves from me to someone. Right. That person is not going to consume all of it. It will move from there to someone else. So it's within the system. It's not leaking out of the system. Unlike if it was not within the banking system. So as long as the money is within the banking system, it's easy for us to do a whole lot of things because then you have data. You have data to plan, to make inflation projections, to determine, for example, your NPR, to determine, total money in circulation. Oh, I can raise a bond. Oh, I can issue this paper. So both private sector, commercial papers, we've seen that go off the roof because people have money to spend. Not that they have money to spend, but the system has money, more like it. So that increases the ability of businesses to transact. To invest. It increases their turnover, their revenue. So by and large, that multiplier effect, that whole ecosystem, that economic ecosystem is always a boost to the economy. So not just for government to access it through our issuance of treasury bills or through or issuance of commercial papers by corporate entities, but just the fact that consumers can spend, producers can produce, and that there is visibility and there's traffic. This financial inclusion, let me say, because we're using the word financial inclusion, but I would say digital banking has seen, that's what's helped, like for example, a lot of jobs are on Instagram, on social media. Someone wakes up and is selling lipstick or cosmetic or a dress is making or she's making. So you've seen that increase in job just from being on social media. Someone is ordering your painting, make me that dress. That's job creation already. Because they are sure and they are confident that when they produce, they'll get payment. And most of the time, they actually get payment even before they produce. So that's also increased the job creation. So it's not just government that's actually creating the jobs. So most of the job is, of course, we know worldwide, most jobs are created by the private sector. And most of them are SMEs. They're small, medium-scale enterprises. What we did when I was the Minister of Industry, Trade and Investment, then I had CAC under me. And then CAC came to me one time and said, you know what, I found out that Money Point registered more than 3 million users and they don't have CAC or business name registration. And they are all operating without a business name. Then we said, what do? We have to make sure these people get included. So we gave them a waiver and a discount to register their business names. So now we just created additional 3 million jobs just like that. Right. Yeah, thank you. And this year, the same thing. So PalmPay also came forward, and all of them started coming forward with their customers who didn't have their proper KYC, because they were just onboarding people without doing proper KYC verification. So when they ran it and they found, so we still have those situations where we now give, a lot of discount to these small or nano businesses. Just give them a discount, register them, onboard them. Then we have NGOs who come forward as well, doing the same thing. Then we have a lot of women now, women groups, NGOs, civil society organizations, either empowering and supporting youth or women, more especially for women. And we are giving them the same opportunity to create their businesses and onboard, and they're doing well.
What's fascinating about this whole conversation is you're telling a story of innovation, both on the private sector, but also in the public sector in terms of government policy and just a kind of openness and understanding of how to aid the economy. Do you have a target for the savings rates that you'd like to see as more people use these platforms?
I know you said 43%. I mean, it would be nice to see 100%. Why not? Well, we'll see. I don't have a target. Well, I think the higher, the better. Anything that is an improvement over 43% will always be an improvement.
Okay.
So savings is one of the fundamental things that we're chasing and driving.
Okay.
If you have strong savings, it's easy. It's cheaper capital for you, for the system, for the whole economic system. And another thing I wanted to also say is with the Nigerian Data Protection Act, there's increased visibility of the regulators over compliance by these fintech companies or even by telecom operators. Protect the data, because those are some of the challenges, some of the reasons why you will not find people wanting to use this platform. When they hear the story of fraudsters stealing your money through your phone, they wouldn't want to go and open an account that they think they are prone to hackers. So we've seen increase in cybersecurity, compliance. The NDPR is doing its work, and of course the Startup Act is helping the entrepreneurs who are in the digital sector and generally to become entrepreneurs, to onboard, to do more business, and every business now is online. Okay.
Unfortunately, we've run out of time. I want to continue this conversation with you, but unfortunately, we've run out of time. Please join me in thanking the Minister for an excellent conversation. Thank you so much.
Thank you.
We're going to move on now to our partner session, our partner presentation, I should say. I'm pleased to introduce Uche Aonwu, the Country Director of Nigeria for the Gates Foundation, for a look at Nigeria's place in the wider picture of financial inclusion and digital connectivity. Uche.
Distinguished guests, ladies and gentlemen, partners at Semafor, thank you for being here today. This is an important discussion around the future, the past and the future of financial inclusion in Nigeria. So it's a privilege to open the session with just a few remarks, right? And actually, what I'm going to do is to provide context to a lot of the things that we just had the Honorable Minister of State talk about, because she's actually essentially talked about the journey a little bit from a policy perspective of what the government did to spur some of the growth that we're going to see in the Findex numbers. So let's actually just start with numbers. And I think before we start, you're going to see numbers here that are going to be a little below the 74% and 5% that the minister talked about. And it's because Findex actually tracks what we call formal financial inclusion, right? So those are people with accounts in regulated financial institutions, right? So a lot of the savings folks who are not in regulated institutions are not tracked by that survey. So just caveating that, but it's great to see that when you add that, we're actually hitting 75%, which is good. So I'll start with this chart, which is at a global level. So the reality is, right, we're all in development, right? But we get very few success stories to tell about development, unfortunately. Financial inclusion, however, is one of those quiet stories of progress that the world has been able to make in global development, right? If you look at the chart on the screen, it tells you what I mean by that, right? So on the left of the chart, you're going to see that since 2011, and if you add the numbers, there's about 2 billion adults in low and middle income countries, right, who have gained a financial account since 2011. That's a big number. Then on the right of the screen, it shows you how financial account ownership has surged over the same period, particularly across South Asia and Sub-Saharan Africa, where those growth numbers have been really, really remarkable. So this is really great progress, right? And I think behind this progress lies a combination of things, right? Some of them the minister has mentioned. It's digital IDs and the proliferation of it, which actually allows a lot of people with the infrastructure to be included. It's things like instant payment systems that have improved over those years, right? And it's things like interoperability, right? The ability to be able to make transactions across disparate systems, right? So that's essentially what has driven this growth. So that's the global picture. So maybe now let's bring it home to Nigeria, right? And let's unpack the numbers a little bit so we actually see some of this, how they happened in Nigeria. So this, so if we can go to the next slide. So the story of Nigeria's financial inclusion journey over the past 17 years by period of rapid growth, but also by moments of stagnation, right? As this chart will tell you. From the macro level, we went from about 40% financial inclusion a decade ago to where we are today, which is about 64%, right? So this is real progress, but it hasn't been progress that that was made without challenges. We did have some challenges across the way, and it's also good to learn about your challenges as well as the progress, right? So what this chart on the screen, as I mentioned before, tells you is it tracks the formal financial inclusion using data from two surveys. One is the Global Findex, which is the charts with the blue axis. Then the second one is the Access to Finance survey, which is led by FINA, which allows us to trace Nigeria's journey, across three distinct phases. So phase one was the period between 2018 and 2014. And this is the period where Nigeria experienced its first rapid growth, right? During this period, financial inclusion grew from a low number of about 24% in 2008. And at that time, access was largely confined to urban areas and with formal banking institutions, right? But it went up the way up to about 50% in 2014, right? And I think the growth during this period was powered by everything the minister said. It was clear policy coherence and leadership from the institutions in Nigeria, right? The government institutions. It started with early reforms around microfinance, agent banking, mobile money, and that opened the door for millions to come in, right? And that drove the inclusion numbers to about 43% by 2012. But then they had the launch of the National Financial Inclusion Strategy in 2012, which was pivotal in actually bringing all the regulators, policymakers, and partners together under a shared goal. It was a simple goal then of expanding access to all, right? So this was the highlight of that strategy in 2012. Now, these policy actions paid off. And as you can see, financial inclusion rose steadily from about that 43% in 2012 to 50% in 2014, right? So that's that first period of growth. But then we moved into the second phase, and I'm calling this the stagnation phase, right? So that's the period between 2014 and 2018, where you can see that growth essentially slowed during that period. And why did it slow, right? I think, there are three factors that why this slowed, right? The first was what I call a market saturation. So in urban centers and among demographics, that support that initial growth, that market was already saturated, right? And there were limited incentives by financial providers to go into new markets or to look for new customer segments, right? The second was we started seeing some weakening in the coordination around implementation of the financial inclusion policy, right? You started seeing many initiatives operating in silos, right? You started seeing a regulatory environment that hadn't quite fully caught up with and adapted to the new emerging technologies that were coming up, right? So that kind of created some incoherence that led to, slower than expected implementation. Then the third was, the mobile money ecosystem. It actually struggled to scale. That period, they were trying to figure out how do we get mobile money to actually scale more broadly, right? And a lot of that was driven by constraints with interoperability and things like that, right? And also limitations in telcos being able to participate in the space, because then there was a fight between banks and telcos and who could own accounts and things like that, right? So as a result, by 2018, you can see that inclusion has stalled at around 50%, right, around 2018, right? And I think the lesson we can learn from this stagnation period is that, momentum cannot be taken for granted, right? I think to be able to sustain it, it requires continuous innovation and tight coordination, right, between both the government as well as people in the private sector, right? So that's what we can learn from that period. Then phase 3 came, what I'm calling this the digital acceleration phase. And that's literally everything that the minister talked about how the internet connectivity, everything started actually driving a lot of acceleration digitally, right? And we can see how that drove the growth again, second growth phase between 2018 and all the way through 2024. But there's two other things that happened during this period that drove it, right? One was the COVID pandemic, because we all remember what happened during COVID, right? And how that started reshaping the way people lived, the way people worked, and the way people transacted, right? So that crisis actually became a catalyst for financial inclusion in Nigeria, because digital finance essentially became a lifeline for a lot of households, a lot of farmers, small businesses, right, who turned to mobile wallets and digital payments to survive. Then something else happened, right, which was remember, I think you mentioned the shortages, was the 2023 Naira redesign policy, right, and the resulting cash shortages that created in the economy. So while it was a bit of a botched kind of exercise, it actually had this unintended consequence that there was a cash shortage. So people actually started focusing more on, digital adoption as a thing, right? So it actually gave a boost to the cause, right? But finally, in this period, that's when we saw the rise of the fintechs, right? So we saw leaders such as OPay, MoneyPoint, PalmPay, and others, start to onboard millions and millions of Nigerians. And the minister talked a lot about how that actually happens in the rural areas, right? So the agility of these companies, coupled with a regulatory environment that was now being more enabling rather than fighting them, right? They actually figured out ways to become more inclusive. We are able to push these inclusion numbers from that 50% in 2018 all the way up to 64% by 2014, right? So by 2024, sorry. So that's what drove the growth there, right? So I think, what this phase shows us is that, actually innovations outside the banking sector can actually scale fast, right? And I think Nigeria figured it out and was able to ride that wave, right? We have a very vibrant private sector in Nigeria. So whenever there's an opportunity, people kind of lean in and move. Okay, so, but now let's go to, so it's not good news, right? So I have to, say the good and the bad in this. So let's go to the next slide and let's talk about, gaps that still persist despite this amazing growth, right? So first, let's take geography. We're going to look at gaps in two areas. One is geography and one is gender. So if you look at this map, you see another truth, right? Which is that Nigeria's inclusion story is uneven when you break it down by states, right? So if you look at the map, in 2023, you have states in the south and southwest and south-south, states like Lagos, Oyo, Ogun, and Delta, that had high inclusion rates above 90%. Lagos is at 97%, right? Delta is at 92%. These are high numbers, right? But then in parts of the northeast, inclusion remains low, below 40%. With states like Borno at 25%, Sokoto 32%, Zamfara at 37%, and Katsina at 37%. So these states are lagging behind, right? Now, this inequality between North and South reflects deeper divides, right? Divides in infrastructure, divides in social inequalities, and access, right? In the South, you tend to see stronger mobile and broadband coverage, right? You tend to see higher literacy rates. You tend to see greater economic activity, like of the type you talked about, Minister. And these are the things that have accelerated that adoption. But in the North, you have lower connectivity, fewer access points, and you continue to see gender-based barriers that continue to slow progress, right? So those are things that have to be dealt with. Now let's look at it from a gender perspective. If we go to the next chart, and there's a chart up here. So the gender gaps remain stark, And these are different countries that are considered as Nigeria's peers, right? And which the Global Findex survey allows us to be able to compare. So if you look at Nigeria, which is the first one, and those little, those bar charts thing at the bottom, we have a 22-point gender gap for Nigeria that was reported in 2024, right? And this is among the widest across all of these focus countries, right? So what is the reason for this, right? So I think Nigeria's stalled progress highlights some of those persistent structural and behavioral barriers that continue to limit women's ability to have access to identity, ability to own mobile phones, and have access to financial services, right? So these are things that are barriers that are causing these gaps. So what does that mean, right? What this data tells us is that in the next phase, we've gone, so this is the third phase, right, of growth, right? So in the next phase of Nigeria's financial inclusion journey, if that journey does not put women and the North at the center, we're going to risk leaving millions behind. So that, to me, is the key takeaway from here. But let's go back to a more positive note. So looking ahead, for me, as Nigeria prepares for its next financial inclusion strategy, there's an opportunity to build a more connected and equitable system, right? And I think to reach that North Star, and Yinka pushed for, what is the North Star? Is it 90%? Is it 100%? Pick your number. But to reach that North Star, I think we have to do a combination of what we've done before to double down on it, and we have to do some new things, right? So what we have to continue doing is continue to accelerate components, the rollout of components of digital infrastructure. Remember, those are the digital public infrastructure. Those were the things that actually got us to where we are, and we need to double down on it. So this means things like continuing to accelerate coverage towards universal IDs, digital ID coverage using the NIN, right? So today, I think by September 2025, the number was about 122 million Nigerians, right, have actually been enrolled in the NIN. So how do we continue to expand that to increase, right? I think we have to continue expanding interoperable data systems, right? There's a new data exchange framework, and the central bank has a new open banking framework, right? We have to keep the digital payment rails that we've built using NIBS, right? You talked about NIBS, which has processed, I think, about 11.2 billion transactions, right, in 2024. And we need to keep kind of driving around those pieces, right? You talked a lot about trust. I think that's the second thing we need to focus on, right? Because you're right. People are scared. Like, the reason people put money under their mattress is that they're worried that somebody will scam them if they put it in digital, right? So consumer protection and trust needs to be something that is at the center of it, right? And I think the third part is what we talked about connectivity, because that is the thing that's going to drive it, right? It's amazing to see what Mr. Tijani is trying to do with the broadband scale up, right? That will help drive a lot of these things. So those are the things I think we still need to continue. So I think if we do these three things well, inclusion will not just expand, but it will deepen, and it will transform how Nigerians save, invest, and participate in the economy. I'll end it by just saying, at the Gates Foundation, we are proud to have supported this inclusion journey for Nigeria since 2012, right? I think we worked very hard to come up with that strategy we talked about in 2012 with the regulatory agencies, and we are proud to see the government maintaining those policy strides and even doing better, right, over the past couple of years. Our commitment is to continue with this work because it is tied to one of the three aspirations that the foundation has as we start our wind down in the next 20 years, which is that we really want to help hundreds of millions of people break away from poverty by putting countries on the pathway to prosperity. And financial inclusion is at the heart of that, right? So for us, this is not just words, it's tightly tied to what we're trying to achieve in Nigeria over the next couple of years. So I think you can count on us to continue staying in the fight. And I'll leave with a thing like, when a woman in Abia saves from her tailoring business, when a farmer in Benue receives instant payment for his harvest, when a small shop owner in Kano, right, is able to access affordable credit, they gain not just income, but actually agency and security, right? So for me, that is what this is all around. If we get this right, the next 3 billion people to join the digital economy will just not gain access, but they will gain agency. Thank you.
We want to move to a panel discussion here. I want to welcome Lasbury Chioma Oludimu, Vice President of Global Operations and Managing Director at Yellowcard. I want to welcome Raliat Sunmonu, Vice President, Middle East and Africa at Axion. Sarah Maka, Executive Director for Africa at One. And Jay Alabraba, Co-Founder and Director of Business Development at Paga.
Why don't I start with you, Sarah, just to talk a little bit about what you've been kind of pleased to see so far and where you see the opportunities for improvement.
Thank you, Inga. Thank you, Semafor, for this panel and for the Gates Foundation for enabling its success. I think it's an important question and conversation around financial inclusion. I really appreciated a couple of things that I've heard today around trust in the system and Uche just highlighting that momentum we can't take for granted. I think it is a silent success that has happened. Oftentimes we harp on what's wrong, what's not working, and I don't think we take a beat to figure out what is working and the progress we have made. So we have made progress in financial inclusion in Nigeria. Let me pause there and let that sink in. I worked with Athena for many years, so the A2F survey is a significant investment of tracking how we're doing in financial inclusion. And to get it to 74% in the 2020. I think what has been profound about the work we are doing at One is one of Africa's highest setbacks is the cost of capital. And the cost of capital is not sort of this thing that bankers and institutions think about. It's things that countries think about. I was mentioning earlier to a colleague that 24 countries on the continent of Africa pay more to service their debt than they do to invest in education and health combined. So when we're talking about progress in a given country, if that country, because all countries borrow, if that country has too high a cost of capital, it impacts the country. But it's not just about a country. It's about banks, and then it's about institutions. And what's something domestically that can increase or reduce the cost of capital is savings. So we're seeing the savings rate in inclusion and financial inclusion increase, but increase incrementally. And I think that's a place that we have to harp on. We have to build a foundation of how do we increase the amount of savings in Nigeria.
So at Axion, we've been around for over 60 years when financial inclusion wasn't as, pardon the word, sexy as it is today, and top of mind for everyone as it is today. And it's always been about those that are underserved or unserved, whatever that looks like. So the smallholder farmer that I think Uche mentioned in Bedway, the shopkeeper in Balogun Market in Lagos, and so on. So these underserved, how do we make the system work better? And I think we recognized a long time ago that you've got to do it maybe across three fronts. One is invest in the service providers that are doing really creative and innovative work to bring the models and the services to these underserved customers, knowing that on day one, it may not be profitable on day one, but it's got to be sustainable. And so we come in with the catalytic capital and investment through different vehicles to ensure that these innovative service providers have the capital that they need to develop, grow, and really contextualize the services and solutions that they're bringing to market, and that they have the right runway to do that, because it does take time. So that's one. We also provide technical assistance. Again, knowing that one, yes, you can have the capital, but how do you know what you don't know? How do you know how to serve that woman in Bauchi if you've never done it before? How do you know how to then ensure that you're approaching her in the right way, that the solution is fit for her purpose when she needs it, as she needs it? And how do you ensure that internally your processes, your systems, your tools, your data, all of that is geared to better support, these customers sustainably? Again, I say sustainably because it's not about aid or grant. If the models aren't profitable, if they're not viable, the businesses won't survive, and then we lose everything. So at the end of the day, it's really about sustainability, using creative and innovative business models. But there's a lot of technical assistance that comes in to support that and to enable that. last but not the least, I think some of what we're seeing, the data, the research, and what Uche has also mentioned comes to that. We do a lot of work through the Center for Financial Inclusion, that's an independent think tank within Action, to think about a lot of the innovations and what we don't know. So we do a lot of deep dive market research to understand digital public infrastructure that everyone is talking about. We understand the benefits, but how might it be misused? We all love the idea of instant and digital credit, but are there times when we need to take a pause? So is there positive friction that can actually support the growth of digital credit for some of these customer segments? So the Center for Financial Inclusion does a lot of deep dive research to really think through how some of the policies, the innovation systems, etc., are affecting people on the ground. And so then we use that data and the research and the insights coming out of the research to work with regulators, policymakers, and folks in this room, right, financial institutions, etc., to create better systems. So I think, as you say, innovation isn't one-sided, but it's got to be, for us, I think the two primary things is that it's got to be underpinned by sustainable business models. Otherwise, we go back to aid and humanitarian assistance, which is not something that anybody wants. And secondly, it's got to drive financial health. So I know we've been talking about financial inclusion, and of course, access is the foundation of that. But what is that access then doing? Once I have access to a bank account, how does it help me save more? How does it help me create better livelihoods for myself and my household? How does it help me pay my children's school fees and so on and so forth? So it's really about the long-term health of those who are included and creating the systems and solutions that support that.
But Lasprey, I want to talk to you about Yellow Card, because we just had the founder, Chris, in Washington, D.C., talk about some of the new ideas and the things you guys are working on. But you're an interesting part of the ecosystem with stablecoins. And maybe you talk about, again, what you're seeing in terms of bringing more people into the financial system who perhaps, barely had an account and now they're using stablecoins, that kind of thing. I mean, that's every time I talk to Chris, that's kind of one of the more amazing things. I was like, he's in all, you guys operate in all kinds of places where you wouldn't expect that to be happening, but it's happening.
Yeah, thank you so much. And what we see in this space is some fragmentation when it comes to regulation, or uncertainty about regulation. And because of that uncertainty, people are skeptical, right? And for you to wholeheartedly play into this ecosystem, you need to ensure that you're doing it the right way, you have the right approvals and all that. But because of the uncertainty around regulation, even regulated institutions are not comfortable playing within the system, right? So if we're talking about financial inclusion when it comes to this ecosystem, I think the major thing sits with the regulation. Once we have regulations, we're able to have regulated entities play within this space. We're able to see partnership between organizations like Yellow Card and the banks, right? Yellow Card and the telcos, and Yellow Card and business, right? Because if we have to get to somewhere in the northern region, like we saw in the graph, right? Then there has to be an existing regulation. There has to be an organization that is already doing something within that region that we can plug into. A good example is the telcos. Before we can do anything with the telcos, there has to be regulatory clarity. And if we have to move to Borno, right, we have to do it there because there is some sort of internet facility. We have to collaborate with MTN, we have to collaborate with Airtel to reach those people within those regions. Right? And another thing we're also doing, we're heavy on, is education, because that digital financial literacy is very important. You can't play in this ecosystem if you don't understand what it's all about. And you're at the risk of being scammed, because people are going to come to you to say, oh, I have this, I want to buy stable coins, I'll do this, come and invest and all that, because you don't have that knowledge about the ecosystem, you're likely to fall, right? So what we are doing is when you go to our platform, you see Yellow Card Academy. What is the essence of Yellow Card Academy? Is to educate people, right? So we've taken it upon ourselves to have some sort of educational inbuilt to our app, so that when you go to the platform, you can actually read about scams, you can read about how you can lose your money going through this process, right?
How to protect yourself.
Exactly, how to protect yourself. And that's what we're doing, really. And another thing we have also seen within this region is the fact that the people that would have to come on board, they don't have the right IDs. I know we talked about IDs. Go to this rural region. I overheard someone tell me she's from Adamawa State, and another neighboring state pulled them out from the village to do their NIN registration, and now she's being added to another state where she's not from, right? So that's a big issue. Even if we're able to bring in this set of people into the ecosystem, it will be counting for another state, but they're actually not from that state. So also need to fix ID system, right? Exactly, to ensure that these people, they have the right ID, because there is enhanced due diligence, KYC. Before we can even onboard you to our platform, you need to have the right KYC documents. And if we need to bring in these people, right, then there has to be tiered KYC, which is actually what we're seeing now. But because we're intentional, we want to bring in this group of people into the financial system, right? We also need to revise that tiered KYC structure to ensure that we don't just ask them for their BVN, because some of them don't have bank accounts. So if you need to bring them into the system, NIN should be enough. So you shouldn't be asking BVN and NIN at the same time, because we all know that they don't have bank accounts, they don't have BVN. Exactly, right? So we also need to see what we can do about KYC to ensure that we're pulling everybody in. That would also help organizations like Yellow Card to onboard a lot of people within this region.
Jay, thanks for being here. Maybe you could just talk a little bit about your journey. Just talk a little bit about that journey for those who might not understand, and how you've kind of evolved your offering as, you know, the whole environment itself has evolved.
So my company, Paga, is a payments and digital financial services company. We're primarily a mobile money operator in Nigeria, licensed by the central bank. We also operate in the US as of a month ago. We've opened a digital banking product in the US in partnership with the US bank. And we started the company in 2009 and went operational in 2012 and have been, you know, off to the races ever since. You know, to maybe touch on some highlights, reflecting many things that Uche said as well. I mean, we started Paga with the vision that, you know, carrying around cash is not necessary, right? Let me give you one classic example. You live in Lagos. Around that time, you're going out to dinner. Maybe you're on a date. You're a single person going on a date. And you have to carry almost a, you know, not typically Ghana must go back, but you're carrying a whole stack of cash to pay, right? People were not using cards. Even ATMs, you go to ATMs, there'd be no cash there. So we thought, you know, the mobile phone could be the one means, maybe not the only means of doing the payments. We started it off with a very clear business to consumer model where there's a wallet, right? So people are able to store value on the wallet. We always had plans for cards, even though we launched it pretty late. And then we also built an agent network where people could go cash in, cash out at the agent. Unlike what's happening in like in Kenya, for example, in Nigeria, the central bank permits that you go to an agent, you can actually transact anonymously. You don't even show up with the ID card. You can just go and transact in cash at the agent. And it was a very, very fantastic business, growing really well. And then over time, you know, things started to evolve, right? Of course, you know, I want to even hop and skip to a point that Lasbury sort of triggered for me around, as the market gets a bit more sophisticated, you know, the bad boys will find ways to make it difficult, right? So frauds start to become an issue. Either things around payments are not instant, and so, you know, someone will make a payment and there's a reversal, etc. But more in general, when people are introduced to a new way of doing things without proper education, there's a high risk of fraud, right? So, you know, momsy, popsy, older people may not be as tech savvy, and even someone may grab their phone and do a USSD transaction and wipe out their account. The same thing happens with banks, right, where people have to get your login into your mobile app or the online platform. And so fraud became a thing, and I think that's where the regulator sort of came in to be a bit more strict on a lot of things around KYC, etc. But I must say something to what Lasbury said around permitting NIN. I want to give you guys a story. Let's say about 6 weeks ago, I had the pleasure of spending time with the EFCC on a fraud issue. Long and short of this is that what is happening in certain parts of the country, right? In fact, actually, you Google it and there's a YouTube video that came out recently similar to this, is there are folks that are going into these rural communities offering young people 1,000 naira, 2,000 naira to take their biometrics and set up NIN for them, and then use that NIN to set up financial accounts, right? You get, let me make up some numbers, because I know the money is always less than 5,000. Let's say 3,000 for the proper, KYC. We now have your NIN and we have access to use it to open accounts, which they do, they're opening accounts. And if you go the extra step of doing the liveliness check, right? You know how when you're onboarding on one of our platforms, you have to do a liveliness check, you get additional X amount. So basically, there are fully functional, fully KYC'd accounts in the system that are not owned by the people who you see there, right? And these are being used for fraud. So, it's painful because it makes onboarding difficult, but I also see how our regulator may do things to protect. Anyway, I don't want to spend too much time on that stuff. Time has evolved. I mean, there are many different areas that PAGA operates in. Obviously, the money transfers, the bill payments, remittances is a big business for us as well. In fact, if you look at what we're doing with the US account, USD account, is really primarily a remittances play for diaspora Nigerians, right? You're able to hold USD. In fact, anybody with a US address is able to sign up. So go to mypaga.com, actually www.paga.com, a bit of selling, and sign up. And you can actually send money and then convert it to Naira, etc.
Sarah, let us talk a little bit about the role of the regulators, because your role on this panel is kind of almost like me. You're kind of almost like someone who is interested, but you haven't got direct skin in the game other than the wider economy.
Oh, we have skin in the game now.
But you know what I mean?
Yeah.
You could have regulators there was always that story about M-Pesa in Kenya, that it kind of happened because the central bank didn't really know what was going on, and they just and then suddenly one day it was like, oh, the whole economy is running off M-Pesa. So you sometimes have that thing which is like, maybe regulators just need to hold back a bit, let innovation happen, and then come in. Or you get to a situation where everyone just thinks this is all some big scam and fraud, if you're not careful.
I mean, I think the role of the regulators can't be underestimated, but what we need is intelligent regulators, right? I remember going off this M-Pesa conversation. M-Pesa came on, and one of the things about Kenya was the telcos could bank. And I remember, Jay, you're probably in the trenches, when civil society was working on CBN, because the bank said, no, if you don't have a banking license, sorry, MTN, you cannot take money. And I suspect strongly that plateauing that happened between 2014 and 2018 was that fight with banks and telcos who can take money from an average citizen. And that policy, which was the banking institutions won out for a time, I think prevented scale. And CBN aligned with the bankers and the banking institutions that banks are the only ones that can take money from individuals. Today, MTN and Airtel and the telcos can, but it required the regulators to evolve. At first, they stuck their heels in the sand and didn't move, and with enough pressure and conversation and showcasing what is possible, they have moved. So the intelligent regulator needs to understand the space we're in. We appreciate that their work is safeguarding, and sometimes when you safeguard too strongly, you prevent innovation. But sometimes, and other times, when you don't safeguard sufficiently, you expedite fraud, as we're seeing. So they have an interesting dance they're having to manage. But something that epitomized sort of the intelligent regulator was what the Honorable Minister of State mentioned about CAC and Money Point. I thought it was profound that they studied what was happening with the nano and micro players, even though they're dealing with money. And Nigeria has one of the more sophisticated payment systems in the world, by the way. We should say that out loud every time and in every space. And I think, yes, I think it deserves a round of applause for Nigeria. And I think we grew our strength because we had a chip on our shoulders with 419, with fraud. So we built this really robust system that we didn't want any frauders to come and tell us about. But as a result, we are efficient and we are active, and it's really in great thanks to our policymakers, regulators, and innovators. So I'm saying all this to say that in some ways, regulators need to have a wait and see approach. The innovation starts, they observe what's happening, and then they intervene, because if they intervene too quickly, they stifle innovation. In some ways, they need to understand that, I like when Jay says the bad guys get smart. Our bad guys are innovators too. So once they study the system, and that's one of the things I love about being Nigerian, we are dynamic and we will catch up with any system you put in place. But ensure that there's safeguards so that when those who want to use the system adversely catch up, we're safe, and we're saving our consumers. Again, the regulator's job is to reinforce trust in the financial system. Trust by external investors, trust by users within the system, trust by the financially excluded, and trust by more macro players. So their job is sensitive and important. And I have to give kudos to our regulators internally. I think they've been doing a good job. I mean, once in a while they get a few things wrong, but I think by and large they're learning, they're changing, they're adapting, and we're building a pretty worthy financial system within Nigeria.
I think that's always a concern, regulatory and policy consistency, because as an investor, you want to be able to reinvest your money where it's most needed. So, get the gains from one entity and then reinvest it in a different entity. And I think that in Nigeria, again, over the last few years, some of the inconsistencies that we've seen have made it more difficult and more challenging. That being said, I think that there's some countries.
Examples?
So we do, for the most part, equity investments, but we also do follow-on debt equity when we do the investments. And so we're bringing in US dollars and investing in Nigerian entities. So for the companies that we invest in, it has to make sense for them. The Forex shifts and changes. I mean, right now it's a lot, but a few years ago when you had that huge difference between what the official rate was and what the actual, I will say, rate was, I think that made it very difficult for the companies that we invest in to actually absorb debt, particularly debt equity, debt financing, and then repatriate that once the funding cycle is done. So I think that's one. There are, though, I always say there are countries that you cannot ignore, and there are markets that you can't ignore, and you do so at your own risk. So, and Nigeria is one of those countries. So no matter how challenging the environment is, I think just the dynamism of the ecosystem, this is where a lot of innovations happen, because it has to, right? Because we have, a lot of structural problems to solve for. We have a huge population to address, and we have talented, innovative, human capital to make use of. So a lot of innovations happen in Nigeria, and therefore, I think Axion continues to be extremely active in Nigeria across all levels, microfinance institutions, fintechs. We're doing a lot more also in the agtech space, and recognizing that when you think about the future of financial inclusion and financial health, you have to start solving for issues around climate risks, right? You have to start solving for issues around rapid urbanization. You have to start solving for issues around energy. And so these require different kinds of lenses. And so one of the most recent work that we, not on the investment side, but on the technical assistance side that we just started is this whole idea of climate finance and bringing together startups in the climate finance space that need the exposure, the hand-holding, and the wherewithal to grow the solutions and customize those solutions that help mitigate climate risks, provide renewable, productive use, renewable energies for smallholder farmers, for agri-producers, etc. But those are the kinds of investments now that we're looking at. Insurance is also a big space. Again, either climate-led insurance, looking at parametric insurance. I think to be innovative, to be creative, and to solve for the issues of, not tomorrow, I'll say the issues of today, whether we like it or not, we have to be in Nigeria because it's where it's all happening and it's where we're most likely to see the scale and the impact that we want. The appeal is that we remain consistent, I think, on the regulatory path, because that can undo decades of effort. That can obviously, I think, create a lot of uncertainty with investors, and that's never a good thing. So nobody wins when that happens. And so I think it's making sure that we're working with, and someone said, I was at another event 2 weeks ago in Nairobi, and someone said, you have to look at regulators as not just stakeholders, but as your partners. I know it's very difficult to do, but that is something. And so I think I mentioned the Center for Financial Inclusion. Part of their role is to help generate evidence-based research and insights to support policy advocacy and really help to move the whole industry.
Thank you for that. Lasbury, I wanted you to talk a little, very quickly, because we're getting close to the end, about how you work with regulators either here or around the continent. Just that point about partnerships with regulators.
We're playing in a novel area where there are no regulations, right? And for us to really move forward and increase adoption, there has to be regulation because trust plays a very important role, right? For us, Yellow Card, we have come to appreciate this, and we have also built it into our system. And one key thing we do in the Yellow Card is regulatory engagement, right? She talked about regulation, regulators trying to catch up and all that, but it's also important to understand for you to have a fit-for-purpose regulation, there has to be collaboration between the private sector and the public sector, right? The players are actually the ones to open your eyes to know what needs to be regulated, right? If you just want to roll out a regulation, you will miss so many things. So there is need for collaboration. We don't wait for regulators to come to us. Rather, we go after the regulators, right? We have a full team in Yellow Cards that is dedicated on regulatory engagement in all the markets where we operate in, right? Because we want to help review the guidelines. We want to help review the policies. We want to tell you, these are the ways you can catch the bad guys, right? These are the loopholes. If you want to put this regulation in place, these are the loopholes. This is how these bad guys can come into the system and exploit the system. So collaboration is key. I recall before the Kenyan regulation was published, we're actually part of the people that reviewed the bill. So that's the kind of collaborations we have with the regulators. Once we are called, we have the capacity internally, and we are always willing to offer that service to the regulators, not just in Kenya, but in most of the markets where we operate in. We have conversations with regulators. Most times we have workshops right? Recently, we're planning one with Botswana. Botswana already have the regulations around digital assets, but there is an aspect that wasn't considered in that guideline, and that's actually, and it's going to impact us if there is no regulation, because we want to have a partnership along that line, right? So we have to go to the regulator, the MBFIRA, to say we need to have a workshop with MBFIRA and the Bank of Botswana, because we want to tell you this is another use case of stablecoin, and because it's not part of your regulation, because you didn't consider it, probably you didn't think that it will ever happen. You didn't think that the banks would ever play within this ecosystem. Now there is an interest, now there is a use case for the banks and the financial services. So you need to define the parameters that this regulated financial institutions can actually play in this space. So that's the kind of relationship we have with the regulators. It's always key, and our policy is go after them. Don't wait for them to come to you.
Fantastic. Jay, what's the experience being at PAGA? I mean, are you best friends with your regulator? Your friendly regulator, or do you have a slightly different take?
Close to what you're saying. That I mean, first of all, I want to take what Sarah said around this. Regulator has evolved over time, right? And it is so extremely true. Dealing with the central bank, who's our primary regulator. I mean, when we started, effectively, there was no mobile money regulation, right? So, and the CBN also, I feel back then was the kind of place where you go, you have to lie down on the ground and say, oh, great CBN, I'm looking for this. We are now at the point where truly, it's real engagement. Regulatory engagement is the name of the game. And truly, we as operators too have evolved over time, right? I mean, remember when we started, it was an older, let me say, entrepreneur in Nigeria that sat with us and said, don't hide, because it was clear we were hiding from the regulator. Because the regulators don't understand what we're doing. And when they don't understand, they said no. So he said, engage with them. And I must confess, it took us maybe like 2 more years before we got comfortable engaging. But we engaged, regulation came out, et cetera, and time has passed. I mean, today I'm the chairman of the Association of Licensed Mobile Payment Operators. And for that reason, I engage with the regulator quite regularly with the CBN. And the CBN, I think, too, has opened its doors to sharing, draft copies of things to engage with the market, to read through. And even in that evolution, they've gone from a point where operators are leading the charge and CBN has to catch up to actually, I would say, maybe we're almost on par now, where CBN, for example, recently brought out the open banking regulation, which the market is not ready for it, but the regulation is there, and we're already working on implementation. The regulatory sandbox was out there before. There's new things that are coming out, even revisions of the agency banking, the mobile money operations. So the relationship, I would say, is much improved. The CBN is ready for engagement. I mean, there's still a bit of that, come with humility kind of thing, but it's there. I mean, this is a government agency, right? And they will remind you. There was one director who has since left CBN. We remind you that the CBN's goal is not to make my business is a for-profit entity, right? Our goal is to, not only help Nigerians, but we have to make money in the process as well, right? CBN will remind you that their business is not to see how you'll be profitable, right? It is to protect Nigeria and protect the Naira. And I think when they wear that, those blinders, A, it's appropriate, but B, sometimes the engagement gets a bit blurry. But overall, I think there's a positive relationship now. I think it happens across with SEC as well and other regulators in the market, because there is a need to grow the economy, and growing the economy means growing businesses in Nigeria.
Fantastic. And we will stop there. It's clear that financial inclusion, as we've heard, is clearly a positive thing for the wider economy. Improving savings rates, including improving money flow in the economy. And everyone on this panel has a role to play in enabling that. And if you just join me in thanking this excellent panel.
Thanks for being with us at the Semafor Next 3 Billion Tour here in Nigeria. Just want to speak to you to understand what the foundation does in terms of enabling entrepreneurship in Africa right now.
Thank you very, very much, and kudos on the phenomenal work that Semafor Monosanya, Director of Operations at the Tony Elumelu Foundation. We are the leading philanthropy catalyzing the next generation of African entrepreneurs. What we do is to our philosophy of Afro-capitalism, which states that we believe that the private sector, especially young entrepreneurs, have what it takes to transform the continent. All they need is that enabling environment, is that and taking upon ourselves to do over the past 10 years. And what do? We identify promising entrepreneurs, either at the idea stage, in which all they have is to transform Africa via a solution, or we have young businesses less than 5 years of existence, and we select the very promising ones, we train them. We have entrepreneurs are across the continent, and when I say across, I mean across all 54 African countries. We train them, business management training, from marketing to customer service to digital skills. This year we even added artificial intelligence because they need to be able to leverage these tools with mentors. We have a pool of about 5,780 mentors from across the world who have said, I'm going to devote my time to supporting the next African entrepreneur. After that, we take them through masterclasses. We get top executives to also take them through personalized sessions. And afterwards, we then fund them with a non-refundable grant of $5,000 US. We have funded roughly about $100 million. And these 21,000 have come from 54 African countries. And it means every country on the continent is represented in that number. These entrepreneurs have in total generated in excess of $4 billion US, created direct and indirect jobs over 1.5 million, and also lifted about 2 million people out of poverty. So for us is we understand that they are with the right solutions, with the right innovations to transform the continent. Someone has to take a bet on them, and that is what the foundation is doing. And our founder would say one of why he's doing it is to democratize luck, because sometimes all you need is someone betting on you, and that is what we're doing.
Said Afro-capitalism, and that's a philosophy that has been developed by
our founder, Mr. Tony Elumelu.
Founder. In terms of the entrepreneurs that you've worked for, how has that Africa? You've mentioned some numbers, revenues, and job creation, but what is the AFRI that has emerged over these 10 years?
Yeah, so the AFRI that has emerged is the transformation of young male or female entrepreneur, and I must say that about 50% of our entrepreneurs are women, and because we understand that if we want to impact the household, it's the most effective way is to impact the woman, the mother in the house, and that is why we're doing that. The AFRI there is the jobs. So there's an entrepreneur in Kenya who imports waste matchsticks from Pakistan into Kenya, and then she converts them into briquettes, which are more cost efficient, more environmental friendly to big corporates, or whether use it to melt sugar at scale or melt oil at scale. For her, that funding was a validation because it was her first grant funding since started the business. Believes in that dream. We have an entrepreneur who imports a grass somewhere in Nakuru, and that grass can thrive in both rainy season and dry season, which means that farmers who have sustainable sources of feeding all through the year. One of his employees is the first child of his mom. His father is late. The first salary he got, he gave it to his mom. The mom was in tears because that was the first time in her life that somebody would support her to raise the kids. So for us, is that story, is that impact, even beyond the entrepreneur we fund, is the people who don't have jobs, is the people whose families can now give their kids nutritious food and the like. So for us, is that transforming of the continent, one entrepreneur at a time.
So over 10 years is a long time to try something. I assume assumptions that maybe have been modified, tweaked, going forward to the next 10 years. Can you give some insight as to how the foundation has changed its approach and what you'll be doing going forward?
Okay, I think three areas. One is in terms of our interventions. So for example, our trainings Over time, we've discovered that for us to make that young entrepreneur in Gambia to be competitive in the global space, we need to ensure that is the curriculum in which we are training him with changing following the times, which is why recently we added artificial intelligence as part of our training, so that these entrepreneurs are able to leverage it to achieve efficiency and effectiveness in their operations. Second, of global challenges, and one of the biggest on the continent is climate change. And the most sustainable way to solve it is by having entrepreneurs build innovative solutions. So we're not only solving it, we are also transforming lives and creating in partnership with UNICEF, We4A in partnership with GIZ, where we've supported hundreds and thousands of entrepreneurs across Africa who are building innovative solutions to transform the continent. The third is that, yes, we do what we can, private sector, but we also need the government to move, engaging the government. From Guinea-Conakry to Ghana to Togo to Benin to Mozambique to Mali, we are engaging the government to say, these are what we are finding. Ease of registering their business. The constraints that women face in running in opening bank accounts, kindly ensure that you solve it, because it is when they do their part that the impact that we expect can even be scaled even further. Area of aligning with global challenges and the SDGs, and in the area of engaging government in the area of advocacy and policy. And we've had very good relationship with our partners, the European Union, the UNDP, GIZ, who have said, we acknowledge your intervention, we see that it works. Scale it.
One thing that hasn't changed is the size of the grant, and I wonder if I could ask you about that. $5,000 is not small money, but you've kept it constant over years, given inflation and the changes in the cost of business. Could you give us a sense of why the money is still the way it is, but also how much beyond money do you provide to these entrepreneurs?
Yes. So the money, we've spoken to our alumni network. Each country has a hub lead that manages the alumni in each of the countries. And they say the last thing that they even remember they got from us is the money. The training that they would have gotten at a school, the mentorship, someone dedicating their time to ensure that you succeed, the community of entrepreneurs that they can always go back to engage, for them is even more important than the funding. That amount, because the higher you go as an entrepreneur, the more funding opportunities you have. VCs, PEs, angel investors are looking for where to place their funds. But there still remains a critical mass of entrepreneurs who nobody is going to meet where we are staying. The more we increase, if we increase that fund, we are most likely going to disenfranchise some who would have wanted to partake. So leaving that fund the way it is so that we keep democratizing luck and ensure that those who they grow to the point where they need more funds, the VCs, the PEs, the banks, the angel investors are ready to fund them. So we don't want to take up that part of the value chain. We want to stay where we are. We want to deepen it as much as we can. We don't, wherever they are, that opportunities are abound on the continent if only they have the ideas and they have the resilience to pull through.
And then finally, on democratizing luck, it's an interesting way to frame what the foundation does. But as we know, beyond luck, there needs to be what kinds of engagement does the foundation have with those in the policy space to make sure that the work you do with the entrepreneurs blooms and flourishes?
Thank you very much. That is why I think I mentioned the foundation grows. And when we say engaging with government, we're engaging with governments in three areas. One is to ensure that we walk through them to get to the underserved areas. Interestingly, you cannot. And they're like, I'm sitting with them to say, we don't want any of your citizens or residents to be disenfranchised. And let us work together to ensure that we find that hidden gem in your country. The second is in terms of ease of doing business. And what we've done is we've gotten feedback from these entrepreneurs the same. Ease of registering their businesses, ease of opening bank accounts, access to reduced interest rate funding, and these are things that we've consistently put in front of them. We've met with the minister in Ghana, in Togo, in Benin Republic, in Mali, in Burkina Faso, in Guinea-Conakry, in which we even met with the Prime Minister to say these are the areas that we are hearing. Kindly work on them, and we are able to also work with you. I think the third area is also ensuring that we complement what government is doing. Because sometimes a lot of this government do capacity building for entrepreneurs, but they don't have the funding to give them afterwards. So we are saying, you do your part, and when applications are open, bring them to us. Work with you. Because the only way in which what we do can be sustainable, the only way in which what we do can outlive us, is if it is entrenched in a government intervention, in a government policy, and the government can continue from where we stop.
Right. It's been a very fruitful conversation, and I wish you all the best in your work.
Thank you very, very much.
Ladies and gentlemen, that's the close for our program, and wanted to thank each and every one of you for making it out here for our event. Raliat, you said it best. Nigeria cannot be ignored. It is a large economy, a dynamic economy, so reflective of the financial inclusion conversation that we're having today, and a very obvious choice for the first stop on our next 3 billion tour. We're very proud of our world-class journalism. Our team delivers every single day. So we invite you to continue following our work and the coverage of the most consequential conversations around. If you're not already subscribed to Semafor's email briefings, please do so, semafor.com. It's free. Thank you again to our remarkable speakers for your candid conversations, your unique insights and perspectives, and a sincere thank you again to the Gates Foundation for their support. We now move on to South Africa, November 18th in Johannesburg, where we'll be hosting the next stop of the next 3 billion on tour, followed by December 9th in Abu Dhabi, and then East Africa in early 26. We really thank you for coming out today, and we hope you can join you on the next round of the tour. Thank you again.